Hello everyone, welcome to Elliott Wave Forex.com YouTube channel. This is Henry. Today is Friday, September 24, and the time is 1 a.m. GMT. So for today, we're going to be looking at the chart of the pound dollars, right? 60 minutes chart right here. Now, pound dollar is a very interesting chart right here. Now I will explain to you my overall thinking about the pair and also the different kind of expectation in different time frame and just the overall sort of direction, overall trend that we can expect. Now, according to the 1 hour chart, then this is suggesting we could see for the downside as long as the rally here fails below 139, right? So we're looking for ABC rally. So we are showing this as a wave 2, and then that means we are within the wave 3 in the intermediate degree right now, in which that wave 3 is subdivided into another 5 waves. So we have this wave 1 of 3 right here, now doing wave 2 of 3, and within wave 1 of 3 we further subdivide into another 5 waves in the minute degree here, 1 2 3 4 5, right? So so that should be pretty clear in terms of what the 1 hour time frame is suggesting right here. Now I think, but this is not going to be as helpful as understanding sort of the overall picture of the pound dollars, right? So yes, we're looking for the downside well below 139. So let me show you in the daily chart to sort of explain to you what we are thinking here. So if we take a look at the pound dollar in the daily chart, so remember this wave 2 here. So we will place the same wave 2 in the intermediate degree in the daily chart. So if we go back to the daily chart, this is your wave 2. Same position as the 1 hour chart here. Now let's take a look. If this is a wave 2, then that suggests that wave 1 is going to be somewhere here, right? So that means, as we can see on the daily chart, right? Now, first of all, look at this. This rally that started from March 2020. By the way, this is the same low everywhere in the indices as well. March 2020 is an important low inflection point. Now you can see we since have rallied, topped out in this June the 3rd. June the 3rd, right? Is a 1 year and 3 months rally. And since then, we've been doing more or less sideways to lower. Let's take a look at the RSI and trend line. Look at this. This has already broken below the trend line, rising trend line. In the RSI, also breaking below the rising trend line. So what this is suggesting is that this looks like this consolidation here. It looks like it's got nothing to do with this rally here. In other words, that's the term we call a connector. So this cycle completes, and now we are in a different cycle due to the fact that now what I'm trying to say is this is not something like a wave 4 from March low, because it doesn't look like a wave 4 anymore based on the uh, channel, right? Based on the parallel channel. So this looks like a new cycle or a new so either you're bullish or bearish. If you're bullish, then that means this is a correction of this entire rally. If you're bearish, then you think this is going to go down and break below March 2020 low. But for now, let's assume this one looks like a 5 waves, or you can count it as a 5 waves. So let's assume this is a correction then, okay? And also the structure so far, it looks gentle, doesn't look impulsive, so that's usually characteristic of a correction. Now you see right here we got so far what we got here is what looks like a 5 waves, perhaps. Maybe you can call it a 5 waves. It's debatable, but you know, you can if you want to. And then let's call it, then if this is a 5 waves and if this is corrective, then let's call this something like a wave A, and this is like a wave B. So that means we are now in the process of doing a select, which should be in a 5 waves, to correct this entire rally. Now, is it confirmed? Not really, because technically we have not broken below the A yet. If we do break below the A, that should increase the probability we're gonna go down and reach ABC 100% extension right here, but we have not. So far we've been consolidating more or less, right? And we could be in a triangle too, by the way. We could be in a triangle like this and continue to chop around non-stop like this. A B wave can be a triangle, by the way, before going down. But see, the thing is this: we don't have a lower low from June the 3rd here. So in other words, we don't have the confirmation. The only confirmation we are going to extend lower really is only if we break below A, right? But the pound dollars, just like the euro dollars, can go down. Because if you recall the chart of the day from yesterday, the euro dollars expected to go down in euro yen is very close to breaking the low. Even though it fails to do it, it sort of double bottom at the same exact level, and it failed to take out the previous low. But usually when you see something like that, the probability is high that it will go down, like euro yen is going to go down, dragging down euro dollars, and that's basically mean pound dollars likely also to go down as well. So we go with the probability at this point, but there is still no confirmation yet whether the next leg lower really is going to take place until you break up below this previous low here. In the meantime, we are calling this like we're calling this as a wave 2 of 3, and then it can start to turn lower again afterwards, right? That's in the meantime what we are calling. Now, another thing here that is interesting, if you go to the weekly chart of the pound, let me erase everything here. Let's take a look at what exactly is the overall direction. Now, if you take a look at this, right, this one looks like an inverse head and shoulders right here. The neckline is somewhere here. Now, drawing the neckline is an art. You can either draw it using the wick, including the wick of the candle, in which case you can see if I draw it with the wick of the candle, this is testing it 3 times, and each time it holds. Now, usually when you have this type of structure and you break to the upside, and this is not a short-term structure, right? This is a 3 years pacing pattern here. Typically what this means is the really long-term right side is going up, right? Now it doesn't matter what the 1 hour chart says. The 1 hour can be expecting more downside and so on, but that's just a short term, right? If we look at it from the weekly point of view, which a lot of people don't, then we know the real right side is most likely higher, okay? But then if I draw the trend line slightly lower, if I just include the body of the candle, then you see that we could potentially go down a little bit more right here, maybe retesting the same trend line before going up, right? So that's why there is still a possibility we actually continue to go down and do something like this, and from there we can go higher. Besides, remember what I said earlier, that this pullback that started from June peak here, this pullback looks like it looks like a different cycle than the one that went up from the March 2020 low, right? Now, because it is a different cycle, you can consider that as a correction of that cycle, right? Now, if it is correcting that cycle, you want to see what the retracement is. Now, the retracement so far is only 23.6. Now, typically when you have a cycle ends like this and you are looking to correct this entire cycle, right? 23.6 is considered a little bit too shallow to correct an entire cycle. Now 23.6 can be used if it is a wave 4, but again, based on the channel analysis, it looks like it is better to count this as a new cycle rather than part of the same cycle from March 2020. So this way it makes sense, or it is reasonable to expect hopefully we can get another leg lower, because again, if you are correcting this entire thing, then maybe you expect somewhere around 38.2 at least, or even better 50%, 61.8 to correct this entire cycle before, if the bullish trend is going to resume at that time, we can resume it from there. So that is the analysis from the pound today, guys, and I hope you find it helpful. And the more you understand Elliott Wave, the more you can appreciate the possibilities and also the different scenarios, as well as the long-term kind of trend, what really matters in the long term. Okay, so that's from me today, and I'll see you all again next week. And as always, if you want to check our work, we have 14 days trial. You can use the link provided in the description of the video here to get the 14 days trial. All right, so I'll see you all again next week. Have a nice day, everyone.